Joining us now is Bill Hoagland, Senior Vice President of the Bipartisan Policy Center. He directs financial and economic policies at the think tank. So, Bill, Democrats say the bill basically favors the wealthy, not the middle class. What do we know about what the bill will do for the middle class?
Well, it will reduce taxes across the board for all groups out there, but because obviously the higher income you are, the more the tax cut benefits you. So as an example, for a middle income, is say in the 40 to 50,000 income bracket, you'll see it next year probably around about a $900 reduction in your taxes. Not a great deal, but $900. If you're up in the 100,000 to 200,000, you'll probably see a tax cut that's equivalent to about $2,000 or more dollars. So it depends upon where you are in the income distribution. Not all people will receive tax cuts either. I like to point out that not everybody benefits from this, though that's what is usually advertised. About 10% of those who are taxpayers out there will see no benefit, in fact may see an actual increase. And most importantly, this tax bill, the way it was designed, is that by 2025 a lot of these tax cuts go away, and indeed taxes go up on the middle class after 2025.
Okay, I was seeing some estimates, according to some estimates, in 2019, Americans earning between $20,000 and $50,000, that lower bracket, will see an average of 10% in tax cuts. So is that right? Is that accurate?
That's about right, and I think there are various estimates out there, but I looked at the estimates from the Joint Tax Committee this morning and went through their distributional tables. It turns out to be in that range, about 10% of a reduction. But remember, it's 10% reduction in a very low base, and so it translates into something, like I said, maybe into the $500 range in terms of a tax cut for next year.
So really not high enough.
It's not high, and particularly when you focus on the fact that these people in this particular income bracket have a high level of debt out there. It's nice to have, but I think that's important. I think the bigger issue here is whether or not the corporate tax changes and the issues of increasing the employment opportunities, if that might benefit individuals either through increased wages, which are not calculated in this particular estimates that we're putting forth here today.
Okay, well, one other point here is that the tax bill will get rid of the unpopular Obamacare insurance mandate. Well, obviously that you worked with on some of these issues.
I sure have.
Tell us why squashing the insurance mandate, though, is in a tax bill.
Well, because the Supreme Court ruled many years ago that this particular penalty was a tax. It was a tax, and that's the way it was ruled by the Supreme Court, and therefore it could be put into the tax bill. I will want to point out something that I don't think has been reported very clearly, and that is that the repeal of the individual mandate does not take place until 2019 at the end. So for 2018, from now until the end of a year from now, the penalty still applies.
Okay, we'll continue to follow all the developments with regards to this tax bill. Bill Hoagland, Senior Vice President, Bipartisan Policy Center, thanks so much.
Thank you. All right.